Hello ladies and gentlemen, this is Dan O'Brien with Target Trading Academy, and the video I'm doing is going to be a small departure from some of the videos I've been doing recently with respect to trade submissions. We'll get back on that again. I'm going to do another one later on today from yesterday's trades, but I wanted to again do a little departure and share with you some trade analysis, okay, based on the Karnak trading technologies and the indicators that we have here in front of you. So the first trade on the left is a valid trade. It's a short, and as you can see, the red is lower than the blue, therefore it was a loss as the market turned around and went up. As I looked further to the left on my live charts, and we talked about this at length in our Karnak trading room the other day, we went over this whole chart here in depth, which is the basis for this video. At any rate, I went back and I looked at it, and it was an unfortunate, looked like a breakout. It wasn't. It was a valid trade, and it lost. You can't win them all. Now, this here, I put an X up here by this buy, which was a partial winner and then a partial loss, so net it was break even. But I put an X up there because that's not a valid trade. Now, the reason for it is that our traders, using this methodology, has to let the lower algorithm, which is a regime switching algo, when it's in the green area, which is higher volatility and trending, that's setting up a first trade, but it has to go below the white line to reset itself for a new trade. Well, I'm glad that the student did not lose money up here, but we don't want them to just make trades wherever they want and not follow the, agreed upon, if you will, the agreed upon trading program. So it didn't reset. He was too excited and got caught buying the high. Again, break even. At least it wasn't a loss. But look what happens now. The trending algo goes from higher volatility and trending, and it goes below the white line, so it's resetting itself for a potential new trade. Then the indicator comes up into a stronger move to the downside, and these blue dashed and white dashed lines are two different types of high frequency traders. So the HFT traders are now slamming the bid, trying to take it down, and we know that from up here. So that's a valid short that he didn't take. There would not be another trade until the algorithm down at the bottom goes below the white line, which it does, and then it goes into the red and starts to come back up again, meaning we have a new potential trade. And where are the HFT traders at? They're buying the market like crazy because they're up in the green here, which means they're 75% bullish. Whereas back here, they were 90% bearish. So that next circle is a valid trade that the student didn't take, and it was a nice big winner. Now this next circle is a valid trade. It's another long, and this one is pretty aggressive, but if you bought it here, and maybe there could have been a breakout, could have been a great trade. But once again, the trending algo trades below the white line, so it resets itself for a new trade, which in this case was another leg higher because the HFT traders were still bullish. So the entry would have been in here for a small winner. The student missed that one, but he did get the big one here. This a nice move here. I'm not sure what that exit here, the third one, was about. Maybe it moved down so fast he just got filled on everything right away. Of course, we want to let at least one of them run as much as we can, but it was still a great trade. So what happens once again, the regime switching algorithm goes from the trend high volatility regime to mean reversion regime, or slowing, choppy, what have you. And when it comes out of that, that is a new potential trade, which would be short. You got the short-term informed traders, HFT guys, at about 95% bearish as it's resetting for a new trend, and bam, that's the trade. So on the screen here, in a very short period of time, we have from 9:40 in the morning to 10:10 a.m., so only 30 minutes, we've got one valid loss, no trade here because that's invalid. So we got one loss, 1, 2, 3, 4 winners. Okay, follow the trending, non-trending algo, and you'd have 4 winners and 1 loss. Losses are unavoidable. You want to keep them small and do the best we can and max out our winning trades. So that's it for this video, folks. I want to keep it pretty short, but I wanted to do a trade analysis because there's an awful lot going on in this small period of time, which could have been 4 winners and 1 loss. And no, do I really want it? Do I take a trade here? Do I not take a trade? It's either valid or not. And depending on, there could be some, some reasons of context where you may not take a trade, but these all look pretty good. The market was moving a lot this day, and again, could be 4 winners and 1 loss. Instead, we had 1 loss, 1 break even, and 1 winner. Still, if that's it, you're not losing and you're learning. That's okay as you move along. But this type of analysis, when you look back in your charts and you do your homework or journaling, will really help you in the long run. So if you find that interesting and you'd like to know more about it, the indicators up here would be a machine learning algorithm that's predicting the direction and the range of the future bars, which goes together with high frequency trading algorithm, and then the regime switching algo down here at the bottom. So if you'd like to learn more about it, let us know at the Target Trading Academy website or our Facebook page. And what's better is we want you to come and join us at Target Trading, where our students swear by their indicators, not at them.